Now in this video, we will continue the chapter income from other source, receipt of money or property by individual or HUF for inadequate consideration or without consideration, and that is called section 56 subsection 2 clause 10, and it is a provision of gift is covered here. So now when this section is applicable, so if these three conditions are satisfied, then this section 56 subsection 2 clause 10 is applicable. So first one is section 56 subsection 2 clause 10 apply only if gift or that is property received is a capital asset for the recipient. If it is not a capital asset for the recipient, then gift provision will not attract. Then it would not apply the property received is stock in trade, raw material, consumable stores of the recipient, then this provision is not applicable. So if person receive any stock in trade, any raw material or consumable stores, then it is not treated as a gift. The only transfer of capital asset for inadequate or without consideration would attract the section 56 subsection 10. Otherwise, it will not attract. Now we will discuss this provision in detail. The table below summarizes the scheme of taxability of gift in a nutshell manner. So nature of asset and taxable value, money, if the whole amount, if the same exceed 50,000. That means if you receive whole amount of money or equivalent, then in cash, that means 50 up to 50,000, it is not taxable. But if it is received beyond 50,000, then it is taxable. Let us say person has received 20,000 during the year, then this 20,000 is not taxable. Here you have to find out the, or you have to take the aggregate value. Don't take the single transaction. Means you have to consider all transactions. Means let us say during the year, if you have received gift of cash gift of 20,000, then again 10,000, then again 10,000. So what is total value of the gift? 40,000. So if it is 40,000, then it is less than 50,000. So that is why nothing is taxable. But now add one more 20,000 here, then your value becomes 60,000. Now in that case whole 60,000 is taxable. Now that doesn't mean you will get exempt up to 50,000 and 10,000 is taxable. No, that is not the provision. Whole 60,000 will be taxable because it is more than 50,000. So either on this side or that side. If it is greater than 50,000, greater than amount is greater than 50,000, then whole amount is taxable. And if amount is less than or equal to 50,000, then nothing is taxable in case of money. And you have to consider all the transaction during the year. Whatever cash gift you have received, you have to make total of that, and if it is, and then total is compared with 50,000, whether it is less than 50,000 or more than 50,000. Now in that also, all you have to consider all transactions. All transaction means if you receive gift of movable property during the year, whatever gift received, make total of all the gift and then compare with 50,000. So and here movable property is divided into two category: without consideration and with inadequate consideration. If it is received, movable property is received without consideration, then aggregate fair market value of the property. Here it is clearly said that you have to consider aggregate fair market value of the property. If it exceeds 50,000, then fully taxable. If it is less than 50,000, nothing is taxable. Same rule is applicable, that is applicable in case of money. You have to make total of all the movable property without consideration which you have received during the year, and then total is compared with 50,000. If it is more than 50,000, full amount is taxable. If it is less than 50,000, nothing is taxable. Now, another category in the case of movable property is inadequate consideration. Now, what is inadequate consideration? Here, the meaning of inadequate consideration is means you have received any movable property, but consideration which person is paying is inadequate. So then in that case, you have to find out the difference between aggregate fair market value and the consideration. And if such difference is more than 50,000, exceeds 50,000, then again it is fully taxable. Let us give one example here so that you will understand it properly. Let us say person has received gift of rupees, movable property of rupees 60,000. In that case, now let us say person has received movable property of rupees 2 lakh and he has paid consideration of rupees 50,000. Actual consideration that he has paid for this movable property is 50,000. So now what is the difference? Difference is 1 lakh 50,000. Now this 1 lakh 50,000, you have to compare this 150 with 50,000, and 1 lakh 50,000 is greater than 50,000, then that means what? Whole amount is taxable. So that is all about movable property. And here you have to make the total. Total means you have to consider all the transaction during the year, whatever movable property gift you have received with inadequate consideration. Then you have to make total of that, and that total will be compared with the 50,000. If it is more than 50,000, whole amount will be taxable. Now, next one, immovable property without consideration. The stamp duty value of the property, if it exceeds 50,000, then in that case, obviously it is taxable, fully taxable. Here you have to compare the value of stamp duty value. Stamp duty value is notified by the government. Let us say stamp duty value of the property is 20 lakh and you have paid nothing and you have received gift of property, immobile property of 20 lakh and with no consideration, without consideration. In that case, this whole 20 lakh will be taxable because amount is more than 50,000. And here you have to see the single transaction. Single transaction means if you have received immobile property gift during the year, let us say you have received two properties. So first property you have paid 60,000, you have received property of 60,000 without any consideration, and second property you have received of rupees 20 lakh without any consideration, then this is also taxable, this is also taxable. Let us say another property of 45,000 you have received without consideration. Now this is not taxable because we have to compare. Now in that case you don't have to make total of 20 lakh, 60,000 and 45,000 because we have to tax individually. Single transaction we have to consider, whereas in fair market, in case of movable property, we have to make the total of the all the movable property which you have received during the year. Let us say first you have received movable property without consideration of 20,000, then you have received 10,000, then again you have received 30,000. So now what is the total? 60,000 here, and this 60,000 is more than 50,000, and all this movable property is received. All this movable property you have received during a single year, same year, or same year, you can say that. In that case, this 60,000 is taxable. So that is why I'm again and again telling you single transaction and all the transaction. So when you have to take single transaction in case of immobile property, you have to take single transaction. But in case of mobile property, in case of money, you have to take all the transaction. Now last category is immobile property with inadequate consideration, and here rule is very simple. The difference between the stamp duty value and the consideration, if such difference is more than the higher of rupees 50,000 and 10% of the consideration. So this is very important rule. We will understand with one example for the same. Whenever you have paid, whenever you have received any immobile property without consideration, then in that case rule is very simple. The whole value will be taxable if it is more than 50,000. But if it is with inadequate consideration, then you have to think little bit. Let us say you have received property of 23 lakh, and for that stamp duty value is 23 lakh, and actual consideration that you have paid is 20 lakh. Now in this case, what is the difference? Difference is 3 lakh. Now, this 3 lakh difference is compared with two value, 50,000 and 50,000 and 10% of consideration. And what is your consideration here? Here your consideration is 20 lakh. You have to make 10% of it. So 10% of 20 lakh is 2 lakh. Now, if difference is more than this two value, then whole difference is taxable. Whole difference is taxable. So in this case, 3 lakh is taxable. So that I want to share with you about inadequate consideration. There is a change in rule because before 1 year it is 5%, but now it is 10%. But the same rule is applicable, but in a different way. And instead of 10%, 20% is applicable. But when this rule is applicable, so it is a immobile property and it is a residential unit held as a stock in trade, and transfer takes place during 12th of November 2020 to 30 June 2021. But this rule you have to keep in mind for the exam purpose right now. So again, we will discuss in a summarized way. First category is a cash gift and check or draft. If total amount of money or received from one or more person during a previous year is greater than 50,000, then whole amount of money received is taxable. Note, if money received is less than 50,000, nothing will be taxable. That we had discussed. Another category is receipt of movable property. Here you have to consider all transaction free, that is without consideration. If aggregate fair market value of all the movable properties received during the year is greater than 50,000, aggregate value is greater than 50,000, then whole amount is taxable. Whole amount of fair market value of the movable property received is taxable. If it is received at a concessional rate, if aggregate discount on all movable property received is greater than 50,000, then total discount received is taxable. Total discount means, let us say property of 3 lakh you have received for 2 lakh. That means what is the discount that you have got? 1 lakh. So that discount is taxable here. Here also note, if value or discount received is less than 50,000, nothing will be taxable. In case of receipt of immobile property, single transaction you have to consider, and if it is received at a free, that means without consideration, stamp duty value is greater than 50,000, whole stamp duty value is taxable. Because let us say property of 20 lakh you have received at free of cost, that means 20 lakh will be taxable. And if you have received any gift at a concessional rate, if discount is greater than higher of 50,000 or 10% of consideration, discount is taxable. So here also we have discussed one provision related to it. Next one, non applicability of section 56 subsection 2 clause 10. However, in any sum of money or value of the property received in the following circumstances would be outside the ambit of section 56 subsection 2 clause 10. So if you have received, that means section 56 subsection 2 clause 10 is not applicable if it is from relative. If gift is received from relative, not applicable. We will discuss the meaning of relative also here. But if any person receive gift from relative, it is not taxable. On the occasion of marriage of the individual, whatever gift received is not taxable. Under a will or by way of inheritance. If person receive any gift under a will, wasiyat, that means, then it is not taxable. In the contemplation of the date of the payer or donor, as the case may be, or let us say um, some person dies and he gives all the property to some person, let us say Mr. X, then in that case, in the contemplation of Mr. Y, Mr. X is receiving, in that case, for Mr. X, it is not taxable. From any local authority, that means any gift received from local authority, not taxable. Gift received from any fund or foundation or university or other educational institution or hospital or medical institution or any trust or institution, not taxable, because section 56 is not applicable. If gift is received from or by any trust or institution registered, then also not taxable. By any fund or trust or institution or any university or other educational institution or any hospital or other medical institution, then also not taxable. By way of transaction not regarded as transfer under section 47, because gift is provision is applicable in case of capital asset, but if it is not a transfer under section 47, then obviously this provision is not applicable. From any individual by a trust created or established solely for the benefits of a relative of the individual, then also not applicable. From a such class of person or subject to such condition as may be prescribed. Here two points are very important, 2 3 points. First, from relative; second, marriage; third one, will or inheritance; fourth one, in the contemplation of the date of the payer or donor. That means this 4 point you have to keep in mind. Now, meaning of certain terms here. What is property? Means we are talking about the capital asset. We are again and again telling that here only capital assets included. Now, capital asset means there is a specific list mentioned here. Only those capital assets are covered here. Like first one is immovable property like land and building or both. If it is we are talking about this thing, then only gift provision is applicable. Then second one, shares and security. If shares and securities come, then also these provisions are applicable. Then jewelry, archaeological collection, drawing, painting, sculpture, any work of art, these are the covered under the definition of capital asset. If any other thing comes other than these things, then gift provision is not applicable. That you have to keep in mind. Once again, I am repeating the list of the capital asset covered under section 56, subsection 2, clause 10. Immovable property like land or building or both, shares and securities, jewelry, archaeological collection, drawing, painting, sculptures, or any work of art or bullion. Now here in that case, next one, in case of an individual who is a relative, means we will discuss the relative, means spouse of the individual, means let us say Mr. X. If we talk about Mr. X, so what is the covered in there? First one, Mrs. X. So if any gift received from Mrs. X is not taxable, because Mrs. X is considered as relative of Mr. X. Brother and sister of Mr. X. Individual means Mr. X. If you are talking about brother and sister, so any gift received from brother and sister of the individual, then also it is not taxable because they are covered under the list of relative. Brother or sister of the spouse of the individual, that means brother and sister of Mrs. X, also covered under the list of relatives. So that is why whatever gift received from them is also not taxable. Brother or sister of either of the parents of the individual, means either of the parents, either brother and sister of the parents, means what, brother and sister of the parents are also covered here. So like Mr. X parents and parents brother and sister, any gift received from them is also not taxable. Any lineal ascendant or descendant of the individual, that means individual lineal ascendant or descendants, means ancestor and the future generation. Any lineal ascendant or descendant of the spouse of the individual, means Any lineal ascendant or descendant of Mrs. X is also covered here. Spouse of any of the person referred in 1 to 6 above. So spouse of all the person referred from 1 to 6. Like if you talk about brother and sister of the individual, that means what? Brother's spouse and sister's spouse. So all the persons are considered as a relative. So now question is, who is not covered under relative? Like friends are not covered under the definition of relative. Niece and nephews are not covered under the definition of relatives. So these persons are not covered. And in case of Hindu undivided family, any members of the Hindu undivided family is considered as relative. Now let us discuss some of the example to clarify the meaning. Here it is Mr. Hemali pertaining to the year ending. Now let us discuss some point directly. Cash gift of 51,000 received from her friend on the occasion of her Sastipatha Pruthi wedding function celebrated on husband completing 60 years of age. This was also her 25th wedding anniversary. Now this 51,000 is taxable or not. So what is the occasion? To complete a 60 years and 25th wedding anniversary. So whether it is covered under the exception wedding anniversary, so no, wedding anniversary is not a marriage, because gift received on the occasion of marriage is not taxable. Here we are talking about wedding anniversary. Then second one, 60-year is one type of occasion that they want to celebrate. So that is also not covered under the exception. So that is why this 51,000 is fully taxable. Next one, on the above occasion, a diamond necklace worth rupees 2 lakh was presented by her sister living in Dubai. So now here the provision of section 56 subsection 2 clause 10 are not attracted in respect of sum of money or property received from relative, because diamond necklace is received from a sister and sister is covered under the definition of relative. So that is why whatever gift received from relative is not taxable. So section 56 subsection 2 clause 10 is not applicable, and diamond necklace is also covered under the list of property jewelry. So that is why nothing is taxable even though its value is more than 50,000. A sum of rupees 1,20,000 was received as a gift from non-relatives by Raj on the occasion of the marriage of his son Praveen. So now here 1,20,000. That means what amount is more than 50,000. Okay, one condition is satisfied. Gift is received from non-relative also by Raj on the occasion of the marriage of his son Praveen. So now it is taxable for Raj or not. It is a function of marriage also. So if you look the transaction carefully, it is not the marriage of Raj. It is a marriage of Raj son Praveen. So that is why whatever gift received by Praveen is not taxable. But Raj is a not the it is not the function of a Raj. It is a function of Praveen. So that is why exemption from applicability of section 56 subsection 2 clause 10 would be available if inter alia gift is received from a relative or gift is received on the occasion of marriage. So in this case it is not the occasion of marriage, it is not received from the gift also, sorry, relative also. So in this case, since gift is received by Mr. Raj from a non-relative on the occasion of marriage of his son, it would be taxable in his hands under section 56 subsection 2 clause 10. Now these are the different more examples. First one, Akhil HUF received 75,000 in cash from niece of Akhil, daughter of Akhil's sister, Akhil of the Karta of the HUF. Now whether this 75,000 is taxable or not. So it is a cash gift. So discuss is, it is taxable because 75,000 is more than 50,000. Sum of money exceeding 50,000 received without consideration from non-relative is taxable under section 56 subsection 2 clause 10. Daughter of Akhil, Mr. Akhil's sister is not a relative of Akhil HUF because he is not considered as covered under definition of relative. So since he is not a member of Akhil's HUF also. So in both the way, she is not considered as a relative. Now next one, Nitisa A member of HUF, father's member of her father's HUF transferred a house property to the HUF without consideration. Stamp duty value of the house property is 9 lakh. Now SDV is more than 50,000. Now Niti Shah, a member of her father's HUF, means her father's HUF, means whether he is considered as relative or not. Immobile property received without consideration by HUF from its relative is not taxable under section 56 subsection 2 clause 10. Since Nitisa is a member of the HUF, she is a relative of HUF because Nitisa is a member of HUF, and as she is a member of HUF, that means she is a relative also, and whatever gift received from a relative is not taxable. So that is why it is not taxable here. Now next one, Mr. Akshat received 100 shares of A Limited from his friend as a gift on the occasion of 25th marriage anniversary. So it is a 25th marriage anniversary. So it is not a marriage function. It is received from friend. That means it is received from non-relative. Then what is the amount of and shares are covered under the list of capital asset. So all the conditions are satisfied. Now find out the fair market value FMV. So FMV is equal to 100 shares into 100 per share price is there. That means 10,000. He also received jewelry worth rupees 45,000 fair market value from his nephew on the same day. So total 45,000. Next 45,000. Now total price of the movable property is 55,000. Now 55,000 is more than 50,000, and both the gift is received from non-relative on the same day. So that is why during the, that means it is received during the year also. So 55,000 is taxable. So all the conditions are satisfied and aggregate value is more than 50,000. So it is, that is why it is a taxable. Now next one is Kisan HUF gifted a car to son of Karta for achieving good marks in 12th board examination. The fair market value is 5,25,000. Now Kisan HUF gifted a car to the son of Karta for achieving good marks. Now whether it is taxable or not. So again car is not included in the definition of property for the purpose of section 56 subsection 2 clause 10. Therefore the same shall not be taxable. So because we will not talk about car because car is not covered here. So that is why we will not discuss in that. And it is not taxable under 56 subsection 2 clause 10. Now next one, on 1/4/2020, Mr. Raja purchased a building from Mr. Kumar for 25 lakh 20,000. So what is the price of the product property? 25 lakh 20,000. That is consideration paid by them or him. But the value of building adopted by the stamp duty valuation authority for charging stamp duty was 28 lakh. So SDV is 28 lakh. Now advise Mr. Raja regarding the tax treatment in this case. So now you have to first of all find out the difference. What is the difference in this case? Difference is 28 lakh minus 25 lakh 20,000. That means what? You will get 2 lakh 80,000 as a difference. Now you have to consider this 2 lakh 80,000 difference and you have to compare it with two value, 50,000 and 10% of consideration. So 10% of consideration, what consideration you are paying here? 25 lakh 20,000. So 10% of 25 lakh 20,000. If you make it, you will get 2 lakh 52,000. Now you have to compare with this two value. Your difference must be higher than this two value. If it is more than this, then whole amount of difference is taxable. So in this case, difference is 2 lakh 80,000 and it is higher of both the value. So that is why 2 lakh 80,000 is taxable. With this cash gift of 75,000 on the occasion of marriage, it is taxable or not? No, it is not taxable. Why? Because it is received on the occasion of marriage. Next one, bullion, the fair market value of which was 60,000 on his birthday. So whether it is taxable? Yes, because fair market value is more than 50,000. A plot of land at Faridabad on 1st July 2021. Stamp duty value is 5 lakh. On the date of purchase, on the date, on that date, Mr. B had purchased it in April 2020. So here you have received immobile property without consideration and value is 5 lakh. So whole 5 lakh is taxable. Mr. A purchased from his friend Mr. C, who is also dealer in shares, 1000 shares of X Limited A at 400 each on 19 June 2021. Fair market value of is 600. When you calculate, you will get 2 lakh. But actually, it is purchase. It is a stock in trade, and stock in trade, for stock in trade, it is not considered as a section 56 subsection 2 clause 10 is not applicable. So that is why here in the answer written dash. Now one more question is given here, but question is not given, answer is given. That means what? I am framing the question for you. Like actual consideration is 20 lakh. Then for fifth question, actual consideration is 20 lakh. Then stamp duty value is 23 lakh. Now, because from the answer I can make out difference between stamp duty value on the date of booking. Forget this date of booking is 23 lakh and actual sales consideration is 20 lakh. Paid in is taxable under section 56 subsection 2 clause 10. Since difference is more than, here forget this, 50,000 and 10% of actual consideration. So what is a 50,000 and 10% of actual consideration? If you make 10% of 20 lakh, you will get 2 lakh. Now, what is your difference? Your difference is 3 lakh. Difference of actual consideration and SDV is 3 lakh. And this 3 lakh is more than this 2 value. So that is why whole 3 lakh is taxable here. So this is now total income from other source is, forget this total is also wrong. If you make total of this, you will get a different value. This is all about gift provision income from other source.